of this. Okay. Yeah. So once again, good morning, everyone. We are glad to have you all this morning on the African Fintech Network in collaboration with Digital US Africa, presenting to you a Fintech capacity building webinar event. We have we're trying to build capacity for fintechs across Africa. And the theme of this event is navigate and comply with regulations with ease through international standards and industry frameworks, fostering a culture of transparency and accountability. We're glad to have you this morning. I am Ayobola Lawal. I'm the Business Development Manager, Digital US Africa. So I'll be co-hosting this morning with Michael Karuki, who is the Regional Manager from East Africa to Digital US Africa. So,
morning, everyone.
Yes, okay. So Michael can kindly greet everyone.
Michael, good morning, good afternoon. Myself and Ali from Nairobi here, I believe it's afternoon. I believe in West Africa is morning, but glad to be here and glad to have this conversation and looking forward to a fruitful conversation. Thank you, Ayobola, and welcome.
Thank you so much, Michael. And as rightly mentioned, it's currently afternoon in East Africa. So good afternoon to our participant from East Africa. So we're expecting an insightful discussion. We're going to learn from industry, seasoned leaders and regulatory experts. We'll also be having our practical tips, to discover actionable strategies to implement within our organizations. And there'll also be an interactive question and answers section, and we'll be getting responses and feedback real time, while on the call, by our seasoned panel of experts. So kindly let us indicate in the chat box where we are joining from, the name of our organization as well. Let us have that in the chat box. Let us keep it interactive. We are optimistic it's going to be an exciting and insightful discussion today. Welcome, everyone. Thank you. So before we proceed, I'll just run through the program, our agenda today. The next item on the agenda is the welcome. And afterwards, we'll be having the welcome remarks by the CEO MD of African Fintech Network. We'll also be having a lead presentation that will be for 30 minutes. Then we'll also be having a fireside chat. The first part will be by Digital Jewels, and to be handled by our group MD, Ms. Adedoyin, of the Tokunbo, who is the Executive Director. The second fireside chat will be handled by the Interswitch Group Managing Director, Mr. Mitchell. We'll also be having the third fireside chat from Chairman Association of Fintechs in Kenya. That is in person of Mr. Ali, Mr. Ali, Hussein Kazim. The previous, that's Mr. Mitchell Elegbe, who is a Group MD and CEO of Interswitch Group. We are so glad to have you on the call this morning. The next agenda, we will also be having the question and answer. That will be for 15 minutes. Then we'll be having the closing and next steps, which will be handled also be handled this morning, followed by the feedback polls before we close for the day. So thank you so much, everyone, for joining. So just a brief introduction. Digital US Africa is an information on IT governance, risk and compliance capacity organization. We have our presence in 15 parts of African countries with a group of head office in Lagos, Nigeria. We also have offices in Rwanda, Kenya. We also have in Ghana. We also have an office in Abuja. So we are glad to have you all this morning. We're an IT GLC consulting and capacity building firm. We've been in the business for about 15 years. And over time, we've been able to consult for several organizations which cut across several sectors. And we are glad to have you all this morning. So without wasting much time, I would like to hand over to Mr. Patrick, who is the CEO, the MD for African Finance Network. Before I do that, African Finance Network, Fintech Network rather, is a platform that unites Africa's fintech and digital finance leaders. They have more than 40 member countries as well. And they bring the continent's fintech, digital finance leaders, organization, and stakeholders together. So Sir Patrick was formerly the governor of the Bank of Sierra Leone, where amongst he made several reform initiatives. He also pioneered Africa's first regulatory sandboxes as part of an overarching financial inclusion strategy. He also served as an alternate executive director of the African Development Bank, representing Sierra Leone, Ghana, Liberia, Gambia, and Sudan, contributed to the formulation and implementation of various developmental programs and projects. So he also holds an excellent combination of academic professional qualifications. We're glad to have him this morning. So I will formally hand over to Mr. Patrick to do an introduction. Yeah, thank you, everyone.
Well, thank you, Mr. Modriso. I think you've already done my job. Suffice to say thank you for that. And I would like to say good morning, distinguished panelists, especially Mr. Mitchell, a group CEO for Interswitch. I have on this session my able Vice President, Mr. Hussein, who covers AFN operations in Eastern Africa. As the moderator has already outlined, so this is a collaborative effort of Digital Jewels and the African Fintech Network. We are a non-profit, non-politically aligned advocacy body. Our mantra is to build a Pan-African fintech ecosystem via collaboration and cooperation of this nature. You know, we're all Africans on this call. I like being Pan-African when it comes to this sort of discussions. You know, fintech or digital finance is one space where we as Africans have shown that we can deliver. Within a span of less than a decade, we are now counting 8 fintech unicorns, either originating or associating with Africa, which is kudos. We have shown that we have talent. We have shown that with the advent of mobile phones, internet technologies, with a largely useful population, Africa can potentially leapfrog financial sector development and by extension, economic development. But despite this sort of gains that we have made, improving both financial and economic inclusion, there remains fundamental challenges in gaining the sort of traction that the African fintech ecosystem deserves. As recently as this year, we are working on a project that is funded by the African Development Bank. We had a sort of survey across our 40 member countries in Africa, and to sort of gauge what are the main pain points, you know, besetting the sector or the ecosystem. And trust me, which is not surprising because I've been in the space for a while, the findings are that regulations, compliance remain a thorn in the flesh. A thorn in the flesh not only for startups that are less than 3 years old, but also for those that have been in the space for over 7 years. So regulations, the compliance thereof is a challenge. So that is why as part of our learning series, we call it learning series, creating capacity for regulators, creating capacities for fintechs more so. We normally join partners like Digital Jewel and other partners, you know, to bring experts who come with practical hands-on experience, you know, both on the side of the players and the regulators. So this is one short endeavor. So I would like, on behalf of the network, the president who is unavoidably absent, Dr. Aina, to thank panelists, thank Digital Jewel for this collaborative effort. We look forward to a session that is enlightening, that is practical. Please pose your questions. We may not answer all of them, but the idea is that we may respond via a blog later, via a white paper that will provide highlights of the discussions on this webinar. So I'd like to welcome everybody formally to this session and to declare it open. Over to you, Mr. Moderator. Thank you.
Yeah, thank you so much, Sir Patrick. That was quite elaborative and concise as well. So we are glad to have you on the call this morning. So I would like to hand over to Mr. Tokunbo Taiwo. Tokunbo Taiwo currently is the current group executive director and the group's CTO for Digital Jewels Africa. He is a seasoned individual expert when it comes to IT, and we'll be glad to have him this morning to take us through the presentation. So I'll hand over to Tokunbo Taiwo.
Good morning, everyone. Good afternoon. good evening, wherever you are joining us from. So we'll be taking a very short presentation to look at the thing, navigate and comply with regulations before we go into the fireside chat. Right, just a little about digital jewels. Ayobola mentioned a few things, but just to also add some more context to that. So Digital Jewels Africa is an IT governance, risk and compliance consulting and capacity building organization. And our focus is on strengthening IT governance, risk and compliance across the African continent. In line with that, we have our footprint in at least 15 African countries. We support organizations in implementing and maintaining best practice, international best practice frameworks and standards. And we ourselves are certified to at least two of these standards, the ISO 27001, which is the Information Security Management System standard, and the ISO 9001 standard. We are duly licensed by the Nigerian Data Protection Commission as a DPCO, Data Protection Compliance Organization. We're also a qualified security assessor, and we partner with top-notch organizations around the world to deliver training. Over the years, we've supported quite a number of organizations, like I mentioned earlier, in implementing and getting certified to best practice frameworks and standards. And these organizations cut across those in the public and private sector and across various economic sectors as well. We also have them in various countries, like I mentioned earlier. Some of these standards include the PCI DSS, the ISO 27001, ISO 20000, ISO 22301, and ISO 9001. We also have supported organizations in implementing frameworks like COBIT and ITIL. So what are we going to talk about this morning? We will take a very brief look at the evolution of the landscape for fintechs. We'll look at what are the drivers of the growth that we've seen and what are some of the challenges that these organizations are facing. We'll then look at the requirements across the regulatory landscape currently, and then talk about the governance imperative of all of this before we conclude. This is a snapshot of what the African fintech landscape looks like currently, a snapshot. As you can see, we have these organizations spread across the continent, and they provide services or operate in various subsectors. This includes pay tech, money transfer, remittances, wealth tech and investment, digital currencies, and so on and so forth. The growth of the fintechs has been fueled by funding, and as you can see on the screen, we've had quite a lot of inflow since 2019, and we have 4 major countries in Africa who have received the highest inflows, which include Nigeria, Kenya, South Africa, and Egypt. This has led to a number of these countries in Africa appearing on the chart of top countries with startups and fintechs. In the Middle East and Africa region, 5 out of the 10 countries with the most startups are in Africa, while 4 out of the 10 countries with the most fintechs are in Africa. We've also seen the rise of these fintechs, and as we heard earlier, we're already seeing unicorns among them, and as you can see on the screen, spread across the continent. The growth of these fintech organizations, though not uniform across the various geographical regions on the continent, has been impressive and continues to look very promising. It is projected that by 2025, next year, the fintech revenues would have grown by 8 times to reach 30 billion. And that cascades down into various countries and regions on the African continent. Just as we have this growth across the various geographical regions in the continent, the growth is also projected to grow across the various sectors in which these fintech operations are being carried out. In line with this, it is estimated that by the year 2030, Africa will be leading in terms of the growth of fintech revenues, reaching about 65 billion by 2030. So what are some of the things that have driven this growth? They include the push for financial inclusion by governments and other agencies. The move towards cashless. The increased availability of funding for innovation, even though we've seen a slowdown in that trend of recent. The fast growth in spending on the continent, as well as the young and fast growing and urbanizing population. In addition to that, increasing digital penetration has put the technology that is required in the hands of many people. Of course, the COVID pandemic also brought some acceleration. We saw that globally, the trend in terms of adoption of technology grew about 7 times, 7 years, if you look at the growth over a period of time. But the sector has not had to do without its own challenges. And these are some of the challenges which we'll just talk about briefly. I mentioned earlier that we've seen quite a number of inflows coming into the continent, but that has slowed down of recent. As you can see on the screen, there are quite a lot of rates here. In terms of equity funding and debt funding, the trend has been downwards. And if you look at also, if you look at, take a 3-year look at the trend, you see that it's also in the downward direction. Operators within this sector have also had to face a number of operational issues. Some of us will be familiar with the challenges they've had with their partners who have reduced their interaction with the fintechs that are based here in Africa. In addition to that, not all the African countries are on the same level in terms of the support that or the enabling environment that they have created for fintechs. We've seen some improvement, but there are still challenges that these operators face. And of course, cybercrime, that's something that we cannot run away from, given the nature of the business of the fintech organizations. According to the World's First Cybercrime Index published by the Oxford University and the New South Wales University, 1 out of the top 10 countries in the world in terms of the cybercrime index is African, and 3 out of the top 20 are African. This gives us an idea of the kind of risk that the fintech operators are facing. Similarly, the issue of fraud is something that's very interesting when you look at the enormity of it. As you can see here, it's quite a big challenge for operators within the industry. Finally, we have skills shortage, which those of us on the African continent are quite used to. We've seen this brain drain, which is fueled by increased demand for skills, as well as a weak supply. The emergence of various disruptive technologies means that more hands, more talents are needed to be able to implement and support those technologies. The ever-changing consumer behavior, demanding more and more, also means that we need more people to be able to meet that demand from the consumers in terms of providing the services that are required. And just as we said a few minutes ago, the pandemic-induced transformation that we've seen also means that more hands are needed to be able to support these technologies and the services that run on them. On the other hand, for those of us in Africa, we've seen monumental brain drain. Talents are moving in droves from the African shores to the Americas, European countries, as well as the Far East. This is coupled with the fact that we have a weak and inadequate supply of digital skills. Also, as a result of the weak educational system that we have. So you find that quite a number of these fintech organizations have to struggle in terms of attracting and retaining talent. So these are some of the challenges that are found in this sector. Now, let's quickly look at some of the requirements across the regulatory landscape. And our focus today is going to be mainly on West Africa, We have another session coming up that will be focusing more on East Africa. So what we're going to do now is just look at some of the areas where the central banks have requirements for operators in this industry, and what is required of them. So our focus is going to be on Nigeria and Ghana as case studies. So I'll be talking about some capability areas and then what the central banks require of these organizations. So the first one is information security. And so they require that organizations put in place adequate information security policies, procedures, and all that. And one of the requirements is the ISO 27001, which is a globally recognized information security management standard. This is mandated by the Central Bank of Nigeria as well as the Bank of Ghana. So what it means is that any operator in this field is required to implement these two standards and get certified to them. Similarly, for those who operate in such a way that they handle payment card data, they are also mandated, both in Nigeria and Ghana, to be certified to the PCI DSS. And then talking about cybersecurity, the two countries also have the ISO 27032, which provides guidance for improving the state of cybersecurity. So for the two countries, it is mandated that organizations implement this standard. This standard is not a certifiable one. So what is required is that organizations should implement them. They are required to implement them. And then in Ghana, there is also a mandate for operators to implement the NIST cybersecurity framework. This also doesn't require certification, but operators are required to implement it. And then we also have the cloud security capability area, and there is ISO 27017. This is mandated in Nigeria, but it's not mandated in Ghana. And then for business continuity, which we all know is very important, we have the ISO 22301, which is mandated in Nigeria for operators, while in Ghana, it is not mandated. But those who implement or get certified to it, by doing that, satisfy virtually all the requirements of the Bank of Ghana. And then in terms of cyber response, the ISO 27035 is not mandated in Nigeria, but is mandated in Ghana. And then for data protection, across all these countries, you have various local data protection regulations. And I'm happy that on the call today, I saw quite a number of our attendees from the Nigeria Data Protection Commission. So for Nigeria, they are required to comply with the relevant regulation, just as that is the same in Ghana. So these are some of the capability areas, as well as the frameworks or standards that are required to be able to meet the requirements of the regulators. You will notice that I've talked about quite a number of these standards. And it's interesting to note that 3 of the regulators themselves, that's the Bank of Ghana, the Central Bank of Nigeria, and the regulator in Rwanda, are themselves certified to the ISO 27001. This is noteworthy. And it also shows that they place a lot of emphasis on getting things right. So it's important that those who operate in those in that sphere, take a cue from them. Now, in terms of rules, we also have some requirements. So in Ghana, it is required that a member of the senior management is appointed as a director of cyber and information security. This is not a requirement here in Nigeria. But for both countries, it is required that they appoint a chief information security officer. And there are certain requirements in terms of the qualifications and experience of those who will be filling these roles. That can be provided. Now in Nigeria, the CISO reports to the MD CEO of the organization, while in Ghana, it reports to the Director of Cyber and Information Security. So that's just a brief about the requirements. We'll take a look at some of the regulations as we go along. Now, if you look at these requirements and a number of other things relating to the compliance requirements that these organizations have to face, it becomes imperative that they have in place a working governance system. And this has been propounded as a way of ensuring that we have a strong corporate governance system. It's three-pronged, and the first is culture and capacity building. The second is stakeholder engagement, while the third is talent strategy and HR. So let's quickly look at the first one, culture and capacity building. Corporate governance is very important in every organization. In the same light, IT governance also needs to be given the pride of place that it deserves, especially in fintechs, where the business rests squarely on information and technology. So there's a need to place adequate attention on that. And there are quite a number of global best practice standards and frameworks that are available for us to be able to put in place the appropriate systems and structures to be able to ensure that we're operating the way we should, in line with the requirements of the regulators and our business. And we've listed quite a number of them on the screen. I'm not going to go through them at this time. But I'll just pick the ISO 27001 as an example, just to demonstrate how it ensures that the organization as a whole is working together to ensure that they meet the requirements of the standard as well as their corporate objectives. Now, the standard, like most of the other ISO standards, is broken down into clauses. And the first clause that is of importance here is the context of the organization. This recognizes that every organization is unique. And so even though you'll be implementing the standard, the particular context of the organization is taken into account to ensure that the corporate objectives are aligned with what is being implemented. In addition to that, the leadership commitment is also very important. Similarly, they need to have in place the appropriate policies and procedures that will guide the people, even as the tone is set at the top. The issue of risk is very, very important. And so in the planning, adequate attention is ensured to put on risk. And then in terms of the people and other resources, there is adequate focus on that as well. Ensuring that we have the resources we need, including people, and that they have the competence that is required to be able to support the implementation of the standard. Just as we said about planning for risk, there is also the need to control it. So that is also taken care of. There's also the need to provide assurance as we implement and maintain the standards. So we have various mechanisms in place, including the internal audit and management review, which give top management a view into how the management system is running. And very importantly, the management system is built in such a way that it continues to improve over the years, meeting current realities. Now, what are some of the benefits of implementing these global best practice standards and frameworks? They include the fact that they provide you a structured approach to regulatory compliance. These frameworks provide guidance on how you should meet those requirements. So if you look at some of the frameworks and standards like the COBIT, ITIL, and the ISO standards, they are structured and methodical in their approach. And so they tell you what you need to do exactly and how to do them. They also align your organizational processes with what the regulatory expectations are, thereby simplifying your compliance efforts across multiple jurisdictions, as we'll see. In Africa, fintechs need to comply with different sets of regulations based on the country or region that they're operating in. Every country has their own data protection law, as an example. So adopting internationally recognized standards, such as the ISO 27001 or the PCI DSS, creates a unified approach to meeting those requirements. The second is risk management and security. The cybersecurity standards help us to face the growing threats of cyber attacks. And the ISO 27001, as an example, establishes a robust information security system that would enable you to comply with the data protection laws across these geographical regions. Customer data is protected, thereby building trust with your clients as well as your regulators. They also help you in identifying and mitigating risks. A third benefit is operational efficiency and governance. Some of the frameworks like ITIL, they help you to streamline your service management, ensuring that you can operate efficiently while complying with the regulatory requirements. Through that process of standardizing your processes, you can quickly respond to regulatory changes and meet audit demands without disrupting your operations. As we all know, even the regulations are dynamic in nature. And so you must be able to operate in such a way that when there are changes in the regulatory landscape, it doesn't affect your operations significantly. So a best practice framework like ITIL will help with that. Also, in addition, there is the need to align your operations with what the business objectives are. And a framework like COVID is very strong in terms of helping you to ensure that alignment. I've said a number of things about data protection and privacy compliance earlier. As we know, there are various regulations across the continent. And we've said that there are a number of standards like the ISO 27701, which focuses on data privacy management. By implementing it, you put in place the structures that enable you not only to protect data, but to align or comply with the requirements of your local regulations, as well as the GDPR. This best practice standards, implementing them would also help you to build customer trust. I mean, when your customers know that you have implemented this recognized standard, it gives them the trust that you're handling their data appropriately. Number 5 is cross-border operations and scalability. It facilitates cross-border compliance. Like we said, if you're operating across multiple jurisdictions, you have to also comply with multiple regulations and other requirements. These best practice frameworks offer scalable solutions that allow you to operate efficiently in multiple markets while meeting the various regulatory demands across those regions. They also enhance interoperability. So a framework or a standard like the PCI DSS ensures that payment systems are secure and compliant with global standards, making it easier for you to expand into new markets and engage in cross-border transactions with little effort. Number 6 is transparency and reporting. So with best practice frameworks like COVID and ISO 9001, which is the quality management standard implemented, they facilitate better internal documentation and reporting processes. And this will help in meeting regulatory reporting requirements and simplifying the audit process, ensuring smooth interactions with the regulatory bodies. Of course, we want to ensure that we don't have any hitches when we need to report or engage with the regulatory authorities. And when you have these best practice standards and frameworks in place, the regulators themselves will have much more confidence in you and view you as an organization that is working towards reducing the risk of fines and penalties. These best practice standards and frameworks also promote innovation, even as they are ensuring compliance. We want to ensure that we are not limiting ourselves in terms of our ability to innovate and take advantage of opportunities while we are trying to comply. So these best practice frameworks and standards ensure that balance between innovation and regulation. So in some of the countries, sandboxes have been provided to enable organizations to innovate. Some of the requirements for you to be able to join those sandboxes include having in place these best practice frameworks and standards implemented. So by implementing it, you have already taken one step towards joining the league of those who are playing in that field. The second part of the governance imperative is stakeholder engagement. And that's where organizations like the Africa Fintech Network come in. They bring together a number of organizations from across the continent. As you can see, we have bodies in each country. So it's important that we continue to engage with the regulators. And when you have these best practice frameworks and standards in place, it moves you one step closer to building their confidence in you. The third part is the talent strategy and HR. And we talked about the skills problem earlier, the brain drain that we are facing here in Africa. So there are a number of things we need to do to be able to address that, both within our organization and across the continent. One of them is to dislodge structural barriers. So what sort of personalities do we bring into our organizations? We need to embrace diversity. We shouldn't limit the demography of those that we bring into the organization. Of course, research has shown that when there is diversity, we're able to produce more. Then it's also important to intentionally build overcapacity. One of the things that we see when we engage with some of our clients is that when we engage with them this year, there is a set of staff that they have. By the time we come back the following year, you find in some cases that 3/4 of the staff there have gone, and then you have to start all of the game. So it's important that we intentionally build overcapacity to be able to take care of that. We also need to ensure that we prevent burnout among our staff so that they are not, so that they can produce at their best. And of course, we should automate the value chain. That will reduce our dependence on human intervention, make the process easier for those who would be operating the system. So it's important that we provide or build capacity in 3 areas. There is education, which is imparting knowledge that is very technical. So ensure that we train them and get them certified. The second is training on how to do certain things, maybe how to use new software and so on and so forth. And then the third is awareness, which is very, very important. As we always say, that the human is the weak link. So in order to manage that, we need to always create awareness to ensure that everybody is being carried along. So in conclusion, there are a number of pitfalls we need to avoid as we strive to navigate and comply. The first is that we need to ensure that there is the right tone at the top. There must be clout in terms of driving compliance. The second is that we shouldn't take a quick fix approach. We should also not take an approach of just ticking the box. We need to ensure that we do this properly. And that is why the question sometimes that people would ask is that, why don't they just implement these standards and not get certified to it? The advantage of getting certified is that it ensures that you have a structure in place that would maintain that system and ensure that it operates at a level that is in line with the requirements of the organization in terms of its corporate objectives, as well as the requirements of the regulators. Finally, it is important that we don't lose focus of what our business is. So how can we, Digital Jewels, how can we support you in line with this? As we said earlier, we operate across the information value chain. And so we're able to secure, assure, manage, enable, and empower. So we're able to provide gap analysis across the various frameworks and standards, helping you to understand where you are now and where you ought to be. We're also able to help you set direction and govern the process of ensuring your compliance, certification, and maintenance to these standards and frameworks. We provide project management to ensure that this is done in an efficient and effective manner. And finally, we provide certification services to the organization to enable you get certified as an organization and to also build capacity within your organization for your staff and also get them certified. So along with this presentation, in the appendix, there are a number of regulations here, key regulations across Nigeria and Ghana that are provided here. That will be provided along with the presentation. Thank you very much.
Thank you so much, our Group CTO and ED Executive Director, Digital Jewels Africa, That was an insightful session, and we gained so much. I'm sure the panelists, everyone, participant gained as well. And before I introduce our next speaker, let me just try to officially welcome you all again to this one-day seminar. We are glad to have you all in this webinar, rather. And I want to acknowledge the gentlemen of the press in attendance, and we're excited about the collaboration between our speakers and learners as well. So, and kindly indicate in the chat box where you are joining from. Also indicate your expectations in the chat box as well. So before I hand over to the next speaker, let me formally introduce Mr. Dedonyo Dunfa, who is our CEO, Group Managing Director of Digital West Africa. She's an IT professional with almost 30 years in professional practice, focusing on strategic value in IT organizations through value-adding interventions across the information value chain. She has led industry initiatives to strengthen and enhance IT governance, risk and compliance processes. She has also skill set to significantly impact business. She's the recipient of several awards and recent in Ghana, and amongst them, she was also named among the top 100 most inspirational women in Nigeria in 2021. Also top 50 women in cybersecurity in Africa in 2020, and also a recipient of 20 Fintech Women in Nigeria in 2019. She is the founder, managing director of Digital West Africa. She's a recognized leader in IT industry and has several notable credentials to her name. So, ladies and gentlemen, let me invite the group MD of Digital West Africa. She's going to be the fireside chat moderator. Let me hand over to her officially. Yeah, thank you.
Right. Thank you, Ayebola, and thank you, Tokumbo, for that presentation. I'd like to welcome all of you who are joining us. I see we have people from Botswana, Madagascar, Mozambique, Lagos, Nairobi, Abuja, from across the continent. It's great to see you all here. I'm really delighted about this collaboration that we have with the African Fintech Network. I think it's going to be, it's a partnership of progressives. So I think it's going to be a really beneficial collaboration for every one of us around this table. I'd like to go ahead and introduce fireside speakers for today. So Tokumbo has spent some time trying to help us understand the regulatory landscape across Africa. I think one critical characteristic of a lot of fintechs is that you do cross-border transactions. And so trying to understand the regulatory landscape across different African countries is key to you because you don't want to fall short of regulation. All right, so at this point, I'd like to quickly introduce our speakers. I don't think that either of them are strangers to the house, but it's good to introduce anyway. I'll start by introducing Michel. Michel is the founder and group CEO of Interswitch, of the Interswitch group. He's a member of the board of directors, and Interswitch is a business that he had conceptualized and led since 2002. When the company actually came into being, I remember that time. Under his leadership, Interswitch has remarkably diversified and broadened its distribution channels and expanded into new channels across Africa. Michel is an alumni of the University of Benin, ESA, Wharton, SIBS Global CEO Program. He is also a consummate people-centric leader. Now, apart from leading Interswitch to win multiple awards, his leadership abilities have earned him several awards as well, including 2019 African Banker Icon by the African Banker, and more recently, the EY West Africa Entrepreneur Award. He's also a Bishop Desmond Tutu Fellow of the African Leadership Institute, and he enjoys mentoring young entrepreneurs, a passion he's found an expression for as a member of the board of Endeavor Nigeria. Welcome, Michel, and thank you so much for joining us, for finding time out of your very busy schedule. We're looking forward to hearing from you. I'd also like to introduce Ali, our second fireside speaker. Ali is a serial entrepreneur, a regular commentator, and a contributor to all things tech, be it policy or regulatory. And he straddles that sector across Africa in particular and the world in general. He serves on several boards. He is the founding chairman of the Association of Fintechs in Ghana and an executive board member. He's VP for Eastern Africa for the African Fintech Network. He also sits on the board of the Old Mutual Investment Group, as well as Longham Publishers PLC. He is a mentor, an angel investment, and a policy advocate for tech and the fintech community in Africa. So I'm sure you'll agree with me that we couldn't have found two more appropriate people to share this topic with yourselves. We know that Africa in recent times has become a hotbed of innovation and entrepreneurship, and the fintech space has been really heated up and has become very exciting. So let's hear from these two practically. Let's hear from the Interswitch group, how they have managed to navigate and comply with the regulation, because they wouldn't be where they are today if they hadn't. And we will also hear from Ali on his own perspectives around this topic across the continent and beyond. So I'm going to be starting with you, Mitchell. Now, Interswitch, in my view, is a great example of a fintech that has enjoyed phenomenal growth at practically all stages of its existence. Once the business case was firmly established, and I remember that in itself wasn't an easy call, but since then, the growth has been unprecedented, making it the first African unicorn. How has business and corporate governance contributed to Interswitch, to the Interswitch group rise? Tell us.
Thank you very much, Dorian. First, I'd like to thank Digital Jewels and the African Fintech Network for the opportunity to share my experience running Interswitch with this team of very distinguished practitioners. I think to answer your question, Dorian, we need to go back to a bit of history. Okay, so we talk about corporate governance. You talk about business growth. There's a context that I think everybody must have. Back then in 2002, when we started, the shape and form of payment was very different from what it is today. It was common for people to go to banking halls and queue up, collect tally numbers, and wait for their cash. It was common, at least in Nigeria, for you to be going home on a Friday because the only way to transact over the weekend is cash. You'd have gone to the banking halls on Friday to withdraw as much cash as you can. This behavior was not ignored by criminals out there. So it was not unlikely that, it was very likely that on your way home in traffic, you could be ambushed and most likely they'll fight cash on you because it's Friday. So this was a social problem that we saw that we thought could be fixed. And the way to fix it was to make cash available just in time for whoever wanted to use it. And the other way to make that happen was to take the bank branch close to the individual. And the other way to make that happen was to leverage technology. Incidentally, that technology did not exist in Nigeria as at the time we're talking about it. Recently, I asked my children if they knew about tally numbers, and they were lost, meaning that young graduates of today will be lost when we begin to tell them about the history of payments in Nigeria, because some of them have never been to a bank branch. They now open accounts.
Absolutely. Some people in this room, I'm sure, wondering what is the tally number.
Yeah, so I try to, so when we talk about it these days, we need to be conscious of the fact that a lot has happened and it's a new generation, but this is the history. In that history, there was a lot of distrust. And I was very happy when I listened to your CTO present and he was talking about trust, and trust, because at the end of the day, it's all about trust, okay? And so for us, young engineer, less than 3 years graduates, there was no way the banking sector was going to trust that I knew what I was talking about for them to rally around me. So that business case you talked about was a critical requirement for anybody to take us seriously. So yes, there was a business case. But beyond the business case, because there was a lot of mistrust, the structure of the organization was also important. And if you recall, at that point in time, Interswitch was owned largely by banks because people wanted to be sure of what was going on. You're asking us to pass payments through you. Who are you? Why should we trust you? So in the absence of knowing who you are, the only solution was strong corporate governance. And so in the early days, in the case of Interswitch, we had on our board MDs of banks. And these guys don't joke. I mean, for an MD to agree to be on your board, a startup tells you the degree of seriousness they put to what they think you are trying to do. So from that point of view, I would say Interswitch was extremely lucky. I would not say because I was ingenious. I was lucky that the very nature of the company and the way it was formed enforced corporate governance from day one. So I was a founder that knew that I could easily be fired for not sticking to proper corporate governance. And that has stayed with me for 22 years. So you will never hear, for example, that Interswitch has been accused of anything and it borders around bad corporate governance. I was with the central bank yesterday and talking to one of the deputy governors and I asked him, I'm here with my chief compliance officer. If you tell me we have any infraction, he doesn't have a job. Okay? And he said, I'm happy to tell you that you don't have any infraction. So that corporate governance is something we've followed from day one. I will find it extremely difficult to explain to my board why a regulator fined us. It will be a very, very embarrassing discussion to have. And so I see myself, even though I'm not the chief compliance officer, as the chief compliance officer of the company, with my designated chief compliance officer only helping me to execute. So I don't joke with whatever he says. If there's anything, my chief risk officer and my chief compliance officer are the two people, and maybe legal, that can actually override me, overrule me and say, no, MD, don't go there. And I accept that fact because I know the nature of the business that we do. It's a trust relationship, and trust is about credibility. What did you say you would do? And did you do it? It is about reliability. What exactly are you doing to support these things you have said you will do? And it's about a degree of intimacy, which is, do I understand the implication of my action on my customers? When somebody is ill and is looking for money to support a surgical operation, and you say, use my system to transfer money, if that money does not get there, we'll lose a life. So having that degree of intimacy about the challenges and impacts of your actions on your customers is very, very important. So for me, therefore, I think corporate governance was designed into the company from day one. I cannot say it's the same for most fintechs, I must say. So I will not give myself credit. I will say I was lucky from the way the company evolved to have been a system where I understood and appreciated the value of corporate governance from day one.
Excellent. Thank you. Thank you for taking us down memory lane. And I think it gives context to where Interswitch is today. You said a number of very interesting things. I mean, essentially from what you said, we get the view that corporate governance was baked into Interswitch from the start. And that sort of kept you on the straight and narrow, if you want to put it that way. You knew you had guardrails that you needed to watch out for. And you also spoke to things like credibility, intimacy, that are the products or the outcomes, if you like, of good corporate governance. And I think it's evident from where Interswitch is today, how that has helped you. I'm going to take a rider question. I recall that Digital Jewels has had the distinct privilege of certifying Interswitch to about 5 global best practice standards as an integrated management system in one vehicle. And this led to a very robust, multifaceted IMS comprising the Information Security Management System, the IT Service Management System, the Business Continuity Management System, the Quality Management System, and even occupational health and safety. And this was in addition to the PCI DSS that the company previously had. We know that this was propelled by the CBN because you gave the example of your visit yesterday, and we know that the CBN has a standards roadmap. However, Interswitch's early adoption, even ahead of several banks, in my view, demonstrated a high regard for best practice adoption and regulatory compliance. We saw you take a risk-based approach alongside several internal maturity-related, activities, focusing on structure, policy, process, and all of that. Why did you take this early adopter approach? And what specific benefits and outcomes have you seen as a result of implementing these standards?
Okay, thank you very much, Dwayne. I think it was 2009. Yeah. I was somewhere over the Easter holidays, and we started to see some degree of fraud through magnetic stripe cards were being cloned. And immediately after that, we got to know that customers were returning their debit cards to their banks. They were angry. People were losing money. So people go to their bank and basically use the scissors to cut their card into two and return to the bank. Say, we didn't ask for this. This happened in Nigeria, okay? You're a payment company. You have a trust relationship, and this is going on. The central bank said, this cannot continue. You must move all your cards from magnetic stripe cards to chip and pin in 1 month. They basically said any card that is not chip and pin within the next 30 days should be turned off. During at that time, we had 30 million cards. We're a payment switch. If you tell MTN or Econet or Airtel, any of these GSM companies to turn off 30 million subscribers, they will have serious challenges. What saved us? From day one, we knew fraud was going to come. From day one, we knew we cannot be in Nigeria, in Africa, in 2002, and be building a payment system that was archaic. So we saw what we were doing as an opportunity to leapfrog. So when we started, even though the UK, Europe was just moving to EMV, the US had not decided what they wanted to do. We felt in the case of Africa, we had no option. It was our responsibility to ensure that what we were building was something that could make EMV happen whenever the market is ready. So the central bank said so, we turned off the cards, and that created Verve. What is the learning from that? It makes a lot of sense to be ahead of regulation. If we're not ahead of regulation, this company would have died and nothing would have happened. Another switch would have come up and it would be business as usual, and I will not be here to talk to you about our experience. So when the central bank starts coming up with regulation, we immediately begin to look for how to execute them and be amongst the first. As you well know, going one after the other to execute this could be a year's activity. So when you guys came with the idea of an integrated approach, because somebody had the wisdom to sit down to say, come to think about it, all of these policies, these standards are interrelated. So one action here is actually required here, here, and here. Why do it serially? Why not do it in parallel? And so to me, that was efficiency. And anything that reduces efficiency, I'm for it. So I actually want to give kudos to you guys for bringing that to our knowledge. Today, Griffith, our Chief Risk Officer, is very proud to tell us he has delivered all the certification in a very short time. Why? Because of that legacy that you so rather than take credit for it, I want to say you guys, Digital Jewels brought it to us. We tapped into it and we are better for it. So yes, you're right. When most banks were not thinking about this, we just felt there was no way out. Always be ahead of regulation because it makes sense. There's an economic sense to it. There's a survival logic behind being ahead of a regulator. So what I actually do in Interswitch is that we don't wait for the regulator all the time. International best practice is international best practice.
Absolutely.
The world is a global village. What you do in one country affects another. People come into Nigeria, Nigerians go out there. We need to meet what standard? And payment is one area where Interswitch does not want Nigeria or Africa to lack. We may lack in many other areas, but this is one area where we had an early mover advantage in terms of modern technology. We should not lose it. And one way not to lose it is to always be looking out for what are the international best practices and how can we get to even imbibe them before our regulators make it a requirement.
Absolutely. I think that's a very good point and very profound. You want to be ahead of regulation. And I think that's something that a lot of the people in the room can take away with them. What we see more of is people waiting until the last minute, until the regulator is, almost using a stick to beat them. And what I typically say in that scenario is that if you wait for the competitor to impose it on you, it becomes a competitive necessity. If you do it ahead of regulation, as you have said, it's a competitive advantage because you can differentiate yourself. You can tell your customers confidently, we put in all these controls, we've improved our processes just to make sure that we're serving you better and serving you more securely. So I think that's a very strong point. And let me quickly go to Ali now. And I know just before I leave you, Mitchell, you've spoken a lot about the evolution in Nigeria, and we're going to come back and talk about your general Africa experience because Interswitch is not only in Nigeria. But let's start that with Ali. So Ali, I mean, you've heard what Mitchell said, and I think that this scenario he's painted over time, it has not been unusual for quite a number of fintechs and especially banks in Nigeria, although Interswitch was obviously an early mover. However, aside from a few isolated examples, we have not seen the aggressive adoption of global best practices in Kenya and East Africa in general, by fintechs and even banks. Why do you think this is? And what do you think can be done to change this, if indeed we need to change it? What are your views?
Thanks. See, you're absolutely correct. And it's not just fintechs, it's banks. And despite being global leaders in mobile money and financial inclusion, Kenya and East Africa hasn't seen much in this space. And I would say there are a couple of reasons. Let me start with first the regulatory environment. I think before I do that, let me just maybe respond to one or two issues that Mitchell has raised. See, Mitchell and Interswitch are outliers in Africa. The building a framework of policy and regulatory standards even before you have scaled as a business is not is not the natural thing for entrepreneurs. So Mitchell, kudos to you. And to just say that, I picked up what you said about luck. My two comments about luck is that, number one, luck meets the prepared. Number two, I just want to quote Henry Ford, who said, I found that the harder I work, the luckier I get. So, that luck could meet you, but if you're not prepared, it just passes you by. So let me get back to the regulatory environment when it comes to Kenya and East Africa. Apart from the fact that, we've made major strides in creating a supportive regulatory framework, policy and regulatory framework for fintech, there are still gaps and inconsistencies, huge gaps and inconsistencies. The lack of a unified, comprehensive regulatory framework across different financial services makes it challenging for companies to implement global standards, because you have your local environment and then you have your global. And let's not forget the fact that compliance is a costly affair. That's one. Then you obviously have infrastructure limitations, not just in Eastern Africa, but across Africa. So the inadequate infrastructure, particularly in rural areas, hinders the adoption of more advanced fintech solutions and structures, which require reliable internet connectivity. Obviously, this makes it super difficult to implement some global best practices that rely on robust digital infrastructure. I mean, just a simple example about KYC. If somebody is sitting in rural Kenya with a 2G network and you're expecting him to ping global APIs for KYC and AML, anti-money laundering, anti-terrorism. I mean, somebody will tell you we have bigger problems to solve. I mean, it's as simple as that. Financial literacy is another key issue. I've talked about cost considerations. I mean, let's look at what it takes to get a global team of compliance experts in your team, or what it takes to outsource that to an organization like Digital Jewels. And let's ask ourselves how many fintechs or even banks can actually afford that on a monthly basis. Those are real challenges that we must consider. Then there's the issue around focusing on local needs. The fintech sector in Kenya and East Africa has largely focused on addressing local challenges and needs, which may not always align with global standards designed for more mature markets. But I would dare say also, when it comes to mobile money, we have sort of defined what those global standards are. I like to always quote this example that 1 in every 10 human beings in the world that uses mobile money regularly is a Kenyan. So when we are talking about global standards, let's talk about local standards first that can actually also be, spread across the world. Then there's the real issue of regulatory capacity. I mean, this is something that Dr. Patrick Conte and I at the Africa Fintech Network are always talking about. We are asking regulators to align with global standards when they themselves may lack the technical expertise or resources to effectively oversee and enforce global best practices across a rapidly evolving fintech and financial services landscape. So, yesterday, I was asked a very interesting question. I was doing an interview for the CIO magazine, which is one of the leading tech magazines in the region. And they asked me, what do you think is the most interesting and pressing technological evolution in fintech? And the guy was expecting me to talk about AI and stuff like that. I said, look, guys, for me, going forward in the next 2 to 3 years, the most interesting tech engagement and evolution within the fintech and financial services ecosystem will be the meshing of RegTech and SupTech, so that we don't have to have these humongous reporting structures every month to policymakers and regulators. It can be real time, and why not? why can it not be real time? So there is somebody somewhere who's working. I mean, we already have RegTech, we have SupTech. These are, so for those who may not be aligned to what I'm talking about, RegTech is basically regulatory technology to help financial services, fintech, and other industries align and be able to report much faster and keep up with their compliance structures. SupTech is supervisory at the regulatory side to help them be more agile and help them supervise their players in the industry that they operate in. The meshing of these two platforms will be super interesting for the fintech ecosystem, and I dare say would reduce costs for compliance dramatically. So how do we change this situation? How do we promote greater adoption of global best practice? Number one, again, this is something we talk about quite a bit at the Africa Fintech Network. How do we harmonize regulations across industries? I mean, Mitchell, just how many countries do you operate in Africa? And how many regulatory reporting you have to do? I mean, this is a full-time job of probably 20 executives, or if you're lucky enough to be able to team, then at least you reduce that leveling of engagement. So harmonization of regulations across African countries. I keep on saying that sometimes we as Africans forget that we're dealing with 54 different African countries, or 55, depending on which part of the political divide you're talking about. And so harmonizing regulations is important. Investment in infrastructure is another key issue. Enhancing financial literacy. And this financial literacy is something that incumbents, especially in the ecosystem, need to take a little bit more seriously. You have pockets of these startups that are doing some interesting work in financial literacy. In Kenya, we have an organization called Abojani, run by a good friend of mine called Robert Ocheng, who's doing some great work on financial literacy. But I don't see this as something that has gone into the general, rather critical mass. So this is something that we need to take very seriously. Providing incentives, offer tax incentives or grants to encourage fintech companies and banks to invest in this and in adopting global best practices. And it may not necessarily be money, it may be credits to tax. I mean, and this is something that is very, very close to my heart. And this is something that policymakers and leaders in the African ecosystem must take very seriously. We seem to pay more attention to giving incentives to foreigners coming into Africa to invest, tax holidays and stuff like that. But let me ask, what incentives have African investors and innovators like Mitchell been given in African countries? What? I mean, we really need to change that mindset. So I think that's super, super important. Fostering international partnerships like these conversations that we are having are super important. Strengthening regulatory capacity. And I think this is crucial. This is something that the whole ecosystem needs to work much more strongly on. Promoting innovation sandboxes, and sandboxes are crucial. It creates an environment where the regulators may be a little bit more, innovative thinking and giving startups a little bit more leeway. So by addressing these challenges and implementing these measures, Kenya, East Africa, and Africa at large can work towards a greater adoption of global best practices, standards in fintech and financial services, while maintaining the focus on local needs and not just financial inclusion, because I think some countries have moved beyond financial inclusion. We are now talking about financial wellness, yeah, and financial resilience. So I'll stop there, Tumfa.
All right. Thank you. I think you've made some very good points around how to improve the situation that we see on the ground, in East Africa. You spoke to harmonizing the regulations, and I think to the point of this webinar, it is a web of different regulations. You've spoken to building capacity, which is also one of the objectives of this kind of forums. And then you've also spoken to things like incentives, which is interesting, and how we would go about it will be very interesting. And I think, amongst others, I think these are things that the AFN African Fintech Network can champion alongside organizations like us, and it will make a difference. However, I'd like to pick you up on your comments around, the reasons why it's difficult to adopt global best practices. They are valid, without any doubt, but I would like to demystify the implementation of global best practices. I find that there's a perception in Kenya that's a really big deal, and it's going to be long and expensive, and it's going to be infrastructure dense. Actually not. So I'll give an example. Interswitch, by the time we implemented, was a pretty big player, not as big as they are now, but a big player. I'll give an example of digital jewels. We've implemented 2 global best practice standards. We've been ISO 27001 certified probably for more than 10 years as an SME. And we've been certified also after that to ISO 9001, which is a quality management system. And this is without any regulatory pressure at all. Because we realized, it is what we do, we decided that we would practice what we preach and take a taste of our own medicine. But we have lots and lots of other players and competitors who haven't decided to go that way, because we firmly believe that there is benefit in it. It can help you really improve your game in terms of service delivery and also make you more secure. And it's not difficult. It's difficult when organizations go around it it's rigorous, but not difficult, in the wrong way. So I'd just like to speak to that, and I'd like to let the House know that the implementation of global best practice standards is really not something that is going to be overwhelmingly intensive in terms of capital or resources. It's rigorous because that's why they are best practice standards, but it's not impossible. But all your points very well taken. I'm going to be speaking to the people in the House. Please, if you have questions, put them in the Q&A box. I see some have already gone in and some have been answered. We're going to go over to the Q&A session in a short while. But before I come back to you, Ali, I'm going to go to Mitchell quickly, go to the audience, and then back to yourselves before your closing remarks. Mitchell, so you've got extensive experience in this field and you've been an early mover. So what advice will you give to fintechs today who aspire to become future unicorns like Interswitch? I guess to be a unicorn is a big deal. So what practical advice will you give to these fintechs?
Okay, thank you very much, Doyin. I think just before I answer your question, I just want to support what my brother and friend had just said, and also to chip in something about this issue of global best practice and local best practice. Okay, we come across that all the time. So I agree with him that as you move across Africa, just understanding what to comply with, something as simple as getting a license, what one license is called and what is permissible with one license in one country is not exactly the same thing in another country. They may have the same name, but if you go look at what you're allowed to do, they're very different. So there's a bit of harmonization I suspect should be done. Okay, how that will be done, maybe people like the African Fintech Network can assist in doing that, but I think there's a bit of harmonization that is really, really required to remove the complexity of moving from one place to the other. On this issue of international best practice or local best practice, I always approach it in one particular way, using this concept of maturity models. Everybody wants to mature. So, and every functional area in business has a maturity model. There's a maturity model for marketing, for HR, for finance, for operations, okay, for risk itself, for compliance itself, okay, for customer service. So what I've discovered is that when we begin to say certify to international best practice, people remind me that we've done IMS already. What do you want to certify again? So I moved from there into, for your particular function, what level of guarantee can you give to me that you are operating at the optimal level? So the first question is, you need to ask yourself, what is optimal? And the only place you can get that is to go look at maturity models. Once we do that, the next question is rate yourself based on this maturity model on where you think you are. And then, if possible, get a third party to also rate you. I was shocked to discover that of all the areas we looked at, only one area was at level 4. And guess what? That function is a function that keeps outperforming. So there's a connection between performance and your maturity model. So what we have done across board is to say, you know what? As a minimum, our expectation is that every function must be at level 3. If you're at level 4, you're operating at above our expectation. If you're at level 5, you're outstanding. So minimum experience is level 3. So please go get level 3. Whether you call it local best practice, international best practice, level 3 is level 3. So that's one idea I think companies can also imbibe. Just pick any function and ask yourself, from how we operate, what level of maturity are we at? Now, to the issue of what advice I can give to other fintechs. I mean, let me be honest with you, we have been extremely lucky as Interswitch. But recently, one of our platforms experienced a fraud. Okay? We didn't lose money, but somebody else lost money. And we have been working with that party to recover these monies. And a lot of them have been quite helpful. But if that money was Interswitch's money, I can assure you there'll be no Interswitch today. Yeah, I can assure you there'll be no Interswitch today. I would have packed my bags, got to my village, and gone for something else to do. So what am I saying? Fintechs cannot afford to take compliance and security measures lightly. One incident can wipe you out. Every time something has gone wrong, as you well know, doing, we have processes. We have certified those processes, but they are not operating. Every time something goes wrong, somebody did not follow due process. And it usually comes in the form of workarounds. So I was very happy when your CTO, in his, I think one of his last 2 slides, told us things to avoid. Workarounds was one of them. So when he said that, I said, yes, this man knows what he's talking about. Because every time it was a workaround that was created to fix a problem that created another problem. So advice 1 is, don't rest because you have processes. You need to go one step further to ensure that those processes are operating. That's advice number 1. Advice number 2, if you're in the payment business, certain things have to be culture-driven, not just technology. I'll give an example. I used to work for oil and gas. In oil and gas, health, safety, and the environment is something you don't joke with. The fintech world has to define culturally what are those 3 things we don't joke with. I think compliance will be one of them. Cybersecurity and fraud will be one of them. There is nothing that goes wrong that somebody did not see. They just did not say it. So part of what I suggest they do is give your team a period of amnesty and say, everything you have seen that is not going well, call it out. Let me share something with you that I've started with my management team. There's what we call attestation. You see, come back to governance. There are two things I do at the beginning of every meeting. One, conflict of interest declaration. In other words, look at the agenda for the day and ask yourself if there's any topic you want to discuss where you have a conflict. It is your responsibility to speak up. When we get to that issue, we will exclude you from that discussion. It's mandatory. That has helped us many times. Number two is what I call attestation to assuring the future. So our risk team have come up with certain practices that they believe if we continue to imbibe and we operate them, it will stop some of the challenges that is very common with. Now, the risk team has done their job, but it's the rest of the business following it. So what I've now instituted is, in every management meeting, I need to get a report 1 week to the meeting where you attest to 5 things that we have outlined. I won't waste your time with that. What that has done is that when my people are coming for management meetings, they have another meeting to ask their people that I'm going to give attestation to all of these things. Before I do that, can you please confirm to me that there's nothing happening that I should be aware of? On a few occasions, things have come up, and they rush to me a week before the meeting to say, we just come to hear about this. This is how we're dealing with it. That's okay, go ahead, it makes sense. So there's a whole culture shift that must happen if you're in a fintech business where trust is a very big thing. And I would advise fintechs to begin to look for that whole drive. And one place to go to is to go to oil and gas and see how they deal with health safety. In every meeting, HSC is a briefing. You cannot drive into an oil company without your seatbelt on. It's a cardinal sin. What is the equivalent of the cardinal sins in fintech that we must not be found wanting in those areas? Maybe it's something the African Fintech Fund Network can also help us do, to say, what are those things that fintech must do that help to drive the right culture to protect? So it's not always I comply. Okay, you comply, but something still goes wrong. Yeah. How do you deal with it? So those are the few advice I like to give. There are many others, but for the sake of time, I'll just give it to them.
Thanks a lot, Mitchell. I mean, you said a lot. I liked the way that you had linked the performance of certain functions with their level of maturity. And in that light, you're clearly able to balance performance and compliance or conformance, and that's really what governance is about. And from my own knowledge of implementing global best practice standards, we typically say that you cannot get certified to any standard unless you are at least at level 3. Which resonates with what you said. And then you made a very strong point about living the standard. So living whatever process that you have committed to yourself. And that is really the culture bit. And that is what, in my view, makes a difference between whether people are just certified from a checkbox point of view, or whether they are certified and it's impacting on their processes and their practices. And I tell clients that, if you have to do this from a regulatory point of view, make it count. Because if you only do it from a checkbox point of view, it probably will not give you or deliver the benefits. But if you implement it in the spirit of the regulation, you implement it so that it affects a culture change. You're living the culture. You gave examples about how you conduct meetings. In our own worlds, they're just little examples about how leadership, especially because their management standards, can demonstrate the importance of doing things properly. Because as they say, people believe what managers do, not what they say. So thank you for giving us some very practical examples, and I'm sure the fintechs in the house are listening. And I see that Patrick has put on his video, so I'm sure he's going to say something. But before we let you have some words, Patrick, I'd just like to ask Ali, riding on this, you know, what are the critical success factors? Mitchell has spoken to some. Do you think that fintechs today need to have to become the next icons? And I'm going to ask you to do this quite quickly so we can listen to
Patrick.
Yes.
I can't emphasize further what my brother Mitchell has said. Let me repeat something that we discuss a lot in Kenya in the ecosystem. And one thing is that we need to re-emphasize and recommit to the fin in fintech. Because I think sometimes we forgot the fin in fintech and we just focus on the tech. That is super important. I hear sometimes, especially the young tech entrepreneurs saying, you know, we are gonna move fast and break things. And it is my holy duty to remind them that policymakers and regulators neither move fast nor do they break things. That is very crucial for us to appreciate and understand. That's one. The other one is governance. I cannot emphasize this more. Why is governance important? Governance is important because it takes care of all the things that we as tech entrepreneurs are not interested in. Risk management, regulatory scrutiny, investor confidence, strategic growth, cybersecurity, compliance management, long-term stability, ethical standards.
No one gets out of bed thinking, let's tackle these things, right?
Without a robust governance structure, you're not going to think about these things. Let me just repeat them because they are crucial. 1, risk management. 2, regulatory scrutiny. 3, investor confidence. 4, strategic growth, not just growth for growth's sake. Cybersecurity. 5, cybersecurity. 6, compliance management. 7, long-term stability. And 8, ethical standards. Financial services and fintechs, whether we like it or not, operate within the larger financial services. Financial services is one of the most regulated entities, industries in the world. And if we think that Africa is going to be different, then we're lying to ourselves. And we need to dissuade our ecosystem from the fact that we can move fast and break things. Let's move fast for sure, but let's not break things, because breaking things, let's leave that to Mark Zuckerberg and his group. I know what I'm saying may not be a popular thing to say, but the things that are sometimes the most unpopular are the ones that must be said, so that we bring everybody in line and ensure that as we innovate, we have a strong foundation of compliance and regulatory ethos and smarts. Thank you.
Absolutely, thank you. And I think I like that emphasis. We mustn't forget the fin in fintech. Oftentimes it's forgotten. And you also have given us some key cardinal issues to focus on for the fintechs. And as you say, these may not be things that people like to hear. But I think that the example of Interswitch has shown us that if you actually do these things and take them seriously, it will actually result in success. Patrick, a number of challenges have been thrown at you at the head of AFN, things like the harmonization of regulations and building capacity, which I know you're already doing, and trying to define, as Mitchell said, what those key must-dos will be, those things that we will have zero tolerance for non-compliance. And Ali has added a few more to that list, you know, all around governance. So let's hear from you.
Well, thank you. I must say thanks to Michelle and Ali for really bringing out. These are the real issues. And let me try to give further, narrative of the regulatory landscape in Africa. Foremost, we need to understand the baseline regulations, those regulations that set up the regulators, the central bank, the stock exchange, etc. Most of these regulations date centuries back. And in the majority of cases, as evidenced by research and personal experience, most of these regulations are outdated. They were not defined or set at a time when digital technologies were the main thing. They were set at a time when everything was analog, paper-based. And in the majority of cases, both research and evidence is showing that a significant, if not the majority of regulators, need to change this baseline regulation. So that's the first fundamental issue. The mandate of a central bank to oversee a fintech in digital lending, in digital asset space is missing. So they don't have that primary mandate. Then the second issue of the vertical specific regulations in Africa, a regulation on payments, a regulation on digital lending, digital assets, etc. Those are really far in between. A study that I was part of in 2021 when I was in Cambridge Center, we looked at 20 jurisdictions in Africa. And of those 20 jurisdictions, when we looked at payments, only about 35% of those 20 jurisdictions had specific regulations on the payment vertical. What most jurisdictions were and are still using, these are what we call repurposed regulations. Regulations that were generated, that have been repurposed to fit the vertical sector, I mean the payment vertical. So then you go into digital lending, then you go to equity crowdfunding. Those verticals, the regulations are weaker. In fact, that study was a landscape study that we were looking at sub-Saharan Africa relative to MENA and relative to APAC region. For almost of the 4 verticals we looked at, Africa was lagging behind. And that's 2021. Trust me, with all of the research that is still going out, the environment has still not changed significantly. So what am I saying? That the work on the side of the regulators is monumental, is huge. And as Ali rightly alluded, they too have their problems. One, they lack resources financially. They lack the technical resource, they lack financial resources, they lack the technical capacity. You know, so most regulators, in fact, don't understand what's a digital asset. How do I regulate money that is not fiat, that is not paper-based? So there is a lot of heavy lifting on the side of regulators. I'm not defending them as a former regulator. I'm just speaking to the issues as they are. What are we doing at the network? I mean, I think, again, our VP for East Africa has already alluded to some of it. But the basics is that we work via fintech associations, 40 of them, including, of course, Fintech Nigeria. So the onboarding process of these associations are sure that we have basic governance. You know, the onboarding documentation requires some basic governance ingredients in the way fintechs operate and in the way associations operate, because we think those are the building blocks. And also we encourage, as basics, associations must have codes of conduct. Those codes of conduct are guiding, they are the guardrails for the fintechs. You know, we largely encourage fintechs, you know, when you look at the trend, within our membership in terms of fintechs, we are looking at in excess of over 3,000 fintechs in 40 countries. And the majority are sole proprietorship, 1 or 2 people coming together. They are in the numbers. And those are where the risks are. You know, there is no separation of responsibilities. There is overlap of responsibility, check and balances are weak. You don't blame them. These are guys with brilliant ideas. They are in their formative stages, trying to bring ideas to market. So there is a lot of overlap of, of controls, no check and balances. So what we try to do via the association is to start building in these building blocks of codes of conduct, basic governance issues about, make sure you have a board, make sure you have somebody in charge of compliance, make sure there is somebody who oversees this that is being checked by Y. So those are the basics at that level. Then at more medium to long term, given all of this background, as Ali rightly pointed out, we need to gravitate towards harmonization. But how can you harmonize, as I said, when the baseline regulations are weak, they're outdated? How can you harmonize when vertical-specific regulations are far and in between they're few? So these are our plans as AFN. We think one route to that, number one, is to continue to encourage regulators to roll out sandboxes. As of 2021, Africa was counting about 15, about 11 regulatory sandboxes and about 10 innovation offices. Those are good starting points because evidence and research has shown that innovation offices and sandboxes are good breeding grounds for, fast tracking fintech going to market. So number one, we're encouraging regulators to at least each country to have a minimum of one regulatory sandbox. So if that happens, the next point, what we envisage are regional regulatory sandboxes. We're already working through a third party. There is something coming up in South Africa. There is something coming up in WAMA, which is West Africa, the monetary zone. If you have these regional regulatory sandboxes, they become coordination points. Say for all central banks in West Africa have one regional regulatory sandbox. You have one in SADC, one in Eastern African Bloc. And that's the medium-term plan. And then the long-term, looking at 5 years beyond, is to have what we currently call in the Pan-African Regulatory Sandbox. So if there is a Pan-African Regulatory Sandbox that is owned and managed in collaboration with regulators and the ecosystem, so if a fintech established in South Africa goes through that Pan-African Regulatory Sandbox, so automatically we start looking at what we call fintech license passporting. Your license that is given to you is a passport for you to operate in South Africa, operate in Kenya, operate in Egypt. So those are our long-term plans. But these are plans that require partners. I was in the African Union in July. Michel was supposed to be a part of that panel. And these were the discussions we were looking at. How do we start championing passporting of fintech license? So that a license that is given in Nigeria can be accepted subject to minor modifications in Egypt, for instance. So these are our long-term ambitions, but we need partners, because these are things we cannot do by ourselves. But these are the things as a network we are championing. We cannot talk about a Pan-African fintech ecosystem if we have fragmented regulations, we have outdated regulations. Our ambition is that, I normally give an analogy. The highways are digital. The cars are going digital, but the policeman who is the regulator, they remain analog. So until the regulators that are analog become digital, the challenge will be there. I stop so for now.
Thank you, and well articulated. I think it will be refreshing for those in the room to see that AFN is thinking very progressively and actually doing something about these challenges that we're all aware of and that we're facing. And so I would probably on behalf of AFN say, if you're not part of the AFN in one shape or form, I think you want to be, because you want to be part of the solution. As we begin to wrap up, I want to go to just take the few questions that I can see. If you have any questions, this is the time to put them in, and we'll answer them very briefly as we begin to wrap up. There is a question which I would probably send to Patrick again, because it's on the back of his reference to sandboxes. It says, what are the sandboxes in this context and examples? Can't seem to find the live answer. No. So what are the sandboxes? But I think this might have been before you spoke, because you spoke quite extensively to it. So perhaps you can just summarize your response to that question.
Yeah, so regulatory sandboxes are basically incubation platforms. They could be analog paper-based, which is what we pioneered years back in Sierra Leone. But now they have moved to being digital, like you have in CBN, Central Bank of Nigeria, you have at BOG Bank of Ghana, you have in the Reserve Bank of South Africa. So basically they are a digital environment that allows regulators to carefully work with innovators, sort of handhold them through the process so that the regulator understands exactly what the fintech is doing. And that sort of creates the capacity for the regulator to determine, are the risks manageable given my regulations? Do I need to give them license? It could be a conditional license, or you say, no, based on our understanding of what you're doing, we think you need to go back to the drawing board and do X, Y, Z. So those are what we call regulatory sandboxes. They are basically incubating environments that the regulators use in concert with the fintech to understand their product and help them go to market or help them refine their products. As I said, by 2021, we had about 15 of those in Africa. And I think most, well, not most, I think the numbers are going up. But we are saying, let each regulator try to have a sandbox. You have jurisdictions like Nigeria, I think, Rwanda, where you have more than one sandbox. You have one at the central bank, one at the capital markets authority, which is good, but it has its own downside. But those are good building blocks to really sort of fast track the way regulators are responding to innovation in the space.
Thank you. Thank you. There's another question. What standard or framework will you recommend for the maturity level to be achieved across all boards of compliance within Nigeria as an optimal function business? Take finance as an example. Maybe I can try and answer that if I understand your question. I think you really just need to determine what area you're looking to achieve maturity in. Mitchell, for example, had spoken to some, but there is also a broad-based standard called the Compliance Management System, okay, that can help you just institute a culture of compliance. But, you know, if you're looking to achieve compliance in information security, then you need to be speaking to the ISO 27001 or Business Continuity 22301, and so on and so forth. There are many standards. Tokumbo spoke to quite a few in his presentation, and you will be getting the recordings if you have registered for this webinar, so you can review that in more detail. There's another question that says, how can one be aware of having the knowledge of action? I'm not quite sure that I understand that, but I think what you're saying here is, how do you know what to do? And I think that's the real point of webinars like this. How you're aware of what regulations you need to be bound by. There's a mishmash. Different central governments have different regulations, but the presentation that was presented earlier today has helped you. Try to help you simplify, aggregate, and synthesize so that at a glance you can see if you're operating in Nigeria or Ghana or Kenya or Rwanda, for example, what are the baseline regulations in this regard that you need to be compliant with. The presentation has spoken to some, and then the presentation has also given a lot of references for where you can get additional information. So, you know, they say that ignorance is not an excuse under the law, so don't be ignorant of the regulations that you need to comply with. So I just to wrap up and to thank all our speakers today for great contributions. I think the topic around navigate and comply with regulations within the context of corporate governance, of business governance, of IT governance has been very well dealt with the fintechs as a focus. I think there are many, many takeaways. The overall takeaway is, as a fintech, do not disregard regulation. It will only come back to bite you. In fact, don't wait for the regulator to come and, chase you. You should be ahead of regulation. That's the way to position yourself competitively. And being ahead of regulation means a lot of things, but the truth is international global best practice standards can help you achieve regulation, because what you will find is that regulators, whether or not they're specific about implementing or certifying to a standard, a lot of their regulations speak to the standard. So the International Global Best Practice Standard is a higher level, if you like, and it does help you to adopt it early so that you can get the competitive advantage instead of waiting until you're flogged to get the competitive, and then it becomes a competitive necessity. It doesn't have to be difficult. It doesn't have to cost an arm and a leg. Of course, digital jewels can help you with implementing these standards and generally striding that balance between performance and compliance. I'd like to thank our speakers. Mitchell, thank you for, being vulnerable, if I can put it that way, alluding to some of the challenges that you're facing and how you have overcome them, using very practical examples that I'm sure that we can all resonate with. Thank you very much. Ali, thank you for your perspectives. Very practical also. We can see that you're sort of living in that fintech world every day. And I'm sure that the fintech community around the table is very grateful for the advice that you've offered. And Patrick, thank you also for collaborating with us on this and for your very useful perspectives and for letting us know what the AFN is doing to address some of these very real challenges that we face today. So as we wrap up, I'd like to hand over back to Michael as we close this webinar. Thank you very much.
Thank you. Thank you very much, our able panelists. Thank you for everyone who's made a presentation. That has been amazing. I think it has been very thought-provoking I appreciate that question where someone was asking, how do I know what to do? As you said, and I think that's why we are here today. So thank you so much, everyone. I'd like at this point in time to welcome the individual who will be doing our closing remarks. This is the CEO of the Fintech Association of Nigeria, Dr. Babatunde Obrima. Welcome, Babatunde, to make the closing remarks as we wind up this session.
Thank you, Michael. It's a pleasure to be here. Thanks, Michelle and Ali. I've known Michelle since 2003 when Interswitch was forming, if I'll put it that way, and I was on the board of Value Card. Value Card was a closed system POS or the card, and Interswitch was coming an open system switch, so, and there were mutual shareholders of these companies, and should we match the two companies? Those discussions went on, but I'll leave the story for another day. So, but I mean, thanks, Michelle. I mean, it's always nice to hear you, and Ali. I mean, Ali is always very forceful about expressing himself and the things he wants to say. So, I mean, regulation is extremely important. If financial systems are stable as the regulations that govern it, so that's why it's a financial system, and that's why even as fintechs, although we want to conquer the market, but those soft issues are extremely important. They can't be backburners. They have to be front burners, compliance, regulation. And what we've done in Fintech Association also is the fact that regularly on a quarterly basis, we have FATF we have NFIU come to present to the Fintech community on the issues within the ecosystem, especially Nigeria being on the gray list of the FATF, and how to ensure compliance, documentation, how to file. I will continue to do that and ensure that there's capacity development in that respect. I mean, we all have to. You can't come into the financial system and say, now this is the one I want to do. This I don't want to do this one. It doesn't work. We just have to comply, because it's at the end of the day, it's our country where there's so much fraud because of lack of compliance. Investors will get wary about coming to invest. So if we want investments to come into this space, we need to take governance, compliance, structures, extremely, extremely important. So thank you very much. It's a pleasure to be here, and we hope that we can have more of this, that we keep building capacity amongst the fintech ecosystem, that the young people will realize that they're the why generation, and they ask why. The regulators don't like why. That's a big challenge also. So how do we harmonize that? What we've done is that we also have what we call the Regulator Forum, which brings together all the regulators and fintechs on a quarterly basis to discuss. And I think that engagement is extremely important. Everybody is a startup when it comes to this space. Emerging technology, nobody knows it all. So engaging will help us to build the ecosystem together. Thank you, and God bless. Back to you, Michael.
Thank you. In Kenya or in East Africa, we normally say Daktari. Thank you, Daktari, for those comments, Dr. Babatunde. We appreciate that. Thank you, everyone, for your time and your patience with us. We shall be launching a poll right now. Just 2 questions only. It will not take you more than 30 seconds to fill it out. Kindly just let us know your feedback on that poll so that we can be able to make these sessions more interactive. We can make them better, and we can make them more valuable to each and every one of us. Yes, the launch is up now. The poll is up now. And as we do the poll, I'll just like to mention a couple of things. I think I've seen a lot of appreciation that has come from the team, for Hussein, for your insights, for Michelle on your advice, especially for the startup management teams which are in this place. And I've seen the hope that the AFN chair has brought today on the group by the efforts that AFN is doing today. So we are grateful very much for the panelists. It is very loud on the comments that have been coming on the chat box, and we appreciate for your time today with us. I think our parting shot today will be basically 5 points that I've picked, which is culture, compliance, cybersecurity and fraud, governance, and strategic growth. Let each and every one of us fintechs here endure and focus on this, and I'm sure we shall be talking like Michelle one of these fine days. Thank you, everyone. We appreciate for your time and for your patience and for being with us today. I believe at this point, the webinar stands closed. Thank you very much for your attendance and have a good afternoon.
Thank you.
Thank you all.
Okay.